Hey everyone. So February in South Africa, you know what that means, right?
Tax season.
Yep, gotta love it. But actually, you know what? This year, I'm kind of looking forward to it.
Oh yeah. Why is that?
Well, I was looking over this guide from Francois Meyer, a financial advisor over at Opie's Trust. And, he's got some pretty interesting points about maximizing tax savings.
Yeah, Francois knows his stuff. What's caught your eye?
So he's really emphasizing these two big strategies, retirement annuity contributions and the employer pension incentive. And I gotta say, I'm particularly interested in the RAs, but honestly, I've never really fully understood how they work.
Oh, okay. Well, an RA, it's like basically it's a way to set aside some of your income for retirement, right? But the really cool thing is the tax benefit. You can actually deduct a pretty significant chunk of your income when you contribute to an RA.
Yeah, I remember reading that it's 27.5%, right? But what does that actually mean in real terms?
So let's say your taxable income is R100,000. You could potentially deduct up to R27,500 from that just by contributing to an RA.
Whoa, okay, that's actually a lot more than I thought. But is there like a limit to how much you can deduct each year?
Yeah, there's a cap. It's R350,000 annually. But the magic really happens over time because inside that RA, all your investment growth, tax-free.
Wait, hold on. Completely tax-free, so like no capital gains tax when I eventually withdraw.
Exactly. It's like this incredible compounding engine. Your money is growing, and then those gains are also growing, and none of it gets taxed until you retire.
All right, now I'm really starting to see the appeal here. So if I decide, hey, I want to max out my RA contributions this year, is there anything I need to be aware of? Any deadlines or anything like that?
Well, if you're thinking of doing a lump sum contribution, those once-off RA debits, then you got to move quick. The deadline to qualify for this tax year is February 28th.
Okay, so no procrastinating on this one.
Uh-huh.
But what if I, can't contribute the full R350,000 right now? Is it still worth doing anything at all?
Even small contributions can make a huge difference down the line thanks to that compounding effect. Every bit helps.
Okay, that makes sense. So we've covered RAs, but you know what else caught my eye in Francois' guide? This whole thing about the employer pension incentive.
Oh, yeah, that's a good one. It's like free money, basically.
Okay, so tell me more about this free money situation. How does it actually work?
So basically, if your employer participates in this program, they'll match a portion of your contributions to your pension fund. It's kind of like a one-for-one deal, right?
Wow, that sounds almost too good to be true. So my employer just automatically doubles my pension contributions. Like magic.
Well, not exactly. It depends on the company's specific policy. Some employers match 100%, others maybe 50%, and there might be a limit on how much they'll match. You'll definitely want to talk to your HR or benefits department, find out what they offer.
Okay, yeah, I'll have to do that for sure. It's definitely worth looking into. But, going back to Francois' guide for a sec, I think one of the things I really appreciate is that he acknowledges that all this can feel a bit overwhelming, right?
Oh, yeah, for sure. Taxes and retirement planning. Not exactly light reading.
Exactly. So Francois actually recommends that if you're feeling lost or confused about any of this, it's always a good idea to reach out to a financial professional, someone who can give you personalized advice.
Absolutely. They can help you figure out, how much you should be contributing based on your income, your goals, all that stuff.
Makes sense. It's easy to get caught up in just trying to minimize our tax bill for this year, but ultimately it's really about building that long-term financial security.
Exactly. Think of it as an investment in your future self.
I have that investment in our future selves. So as we wrap up this deep dive, I want to leave you with something to think about. What if you could invest the maximum in your RA this year? What could that look like in 5, 10, or even 20 years?
Mm-hmm.
Pretty powerful, right?
Absolutely. Something to consider as we head towards the end of the tax year.
You got it. All right, folks, that's it for today's deep dive. Thanks for listening.
Thanks, everyone.